Welcome traders, I'm going to try to share with you my live trading session today. We're looking at S&P 500 and futures. We're trading the 2000 tick chart and we can see that the structure is clearly a trend range and we have very few bars on the chart and we have 2 minutes before the market opens. As you can see, clearly a trading range because I have a lot of price swings just up and down, flat EMA, and I'm following the short-term channels. Now this is a trend range, slow trend range from the very open. That means that the failed breakouts are more reliable. In any case, I don't want to jump ahead of myself. Right now, what I'm going to do is I'm going to follow the short-term channels, which right now have a break, new extreme. So I'm just going to expect for prices to go here, show me some buy-side momentum, and then I'm going to follow the price action quite slow. I'm following very tight channels. There's no room for extra broad, wide channels in this trend range. I want to follow the trend line rule precisely, and for this reason, I'm following the short and tight channels. All right, traders, I'm going to enter this failed breakout. If you pull back, it's moving quite quickly. We didn't get filled on this setup, unfortunately. But this setup was a failed breakout. We have two larger legs to new extreme. We have first leg down like this, pull back, second leg down. You notice how far away you're from exponential moving average. This is telling you that the prices will snap back almost certainly. And this was the slow trend range from the very beginning of the session, which is indicating that failed breakouts have higher reliability. So you can see break, new low. We're below this important support. Most breakouts of trend ranges will fail. A great bullish bar. We were so far away from EMA. There's definitely a chance you're going to pull back this a little bit. We didn't even get a chance to re-enter on a high low. When I'm fading the breakouts, I generally want to be a little bit more greedy. For this reason, I use limit order. But this time, we didn't even pull back. All right, so we have another failed breakout. Uptrend has a break new extreme. But this time, I'm not going to try to fade the breakout because this is very steep. And I like to see a little bit of a sideways movement. And this is way too bullish for me to fade the breakout just yet. So right now I'm following the trend range rule. We have a failed breakout, we're pulling back, and I'm looking for a failed second entry long for this breakout to go back into the trend range and for us to create a bearish downtrend because most breakouts will fail. Uptrend has a break new high. We have a little bit short and temporary bullish push, but that's not that big of a concern for me. We may end up making one more push up before we eventually reverse all the way into trend range. Right, traders, I just took a very aggressive failed second entry long. And I'm going to tighten it for a tick target profit. I see new high, first entry long, second entry long failure, confirming failed breakout. And this is aggressive because we are above the exponential moving average. But I trust this setup so much in trend range rules. Everybody's going to go trap going long here on the second entry long. So far away from EMA, we really need to pull back into this trend range. But this is aggressive setup for sure. I'm willing to risk it though because the context here is so strong in favor of bears. We're bouncing off my exit order and we finally tick through. So I'm going to tighten the stop loss into break even. And this is what you do. You're playing the trend range rules overall. Everybody going to get trapped here going long on a balance of probabilities. Most breakouts will fail and you can see prices are going for a runner, but we can still survive. Let's see. All right, traders, so our runner just got stopped before EB eventually continue working. They needed to trap a couple more bulls and market is right now going back, following the perfect trend range rules. We had a larger two-leg up pullback. Market likes to move in pairs of two, first leg up, second leg up. Back at the top of a trend range. And notice we have new low, first entry short, second entry short. Was from the range highs. Pretty tempting. You're selling high, which is what you want to do. Now we have strong push below EMA. It's getting a little bit sideways, a little bit choppy. So I don't want to be taking a lower high, especially below this bullish bar. I'm expecting more for prices going back down to the support. We'll see what can happen. Right now we had a massive push back into trend range. Two legs up, second entry short at the highs, and I'm just waiting. So we can see that the range held, sellers started selling at this particular high. You can see very strong bull bar at the close, turn into bearish pin bar. This was a decent sell setup, strong push below EMA, but notice the lower high was so ugly, and we had a failed second entry long, which is generally what you would like to enter. New high, first entry long, second entry long, failure below EMA, but notice again, horrible bar, and 1, 2, 3, 4, 5 bars stacked, almost 6. So really didn't form that clean, but had you had better signal bar or overall in the future, if you see cleaner context here without congestion, it makes sense to go short here because you're coming off the range highs. You need a second leg for this first leg, and most likely if all things are good for the sellers, you're going to reach the main support of the trend range. We are in the middle of trend range. It's always much easier to buy low and sell high while you're trading in trend range. Once you are in the middle, it gets a little bit dangerous and you can get tripped up because you're guessing and it looks tempting to trade it both ways. So right now I'm just waiting this out. All right, so I've been sitting here still waiting with my one single trade. Right now we are breaking the support again. We managed to go from the very failed breakout all the way down to this support, and right now we have another failed breakout, but it's looking a little bit ugly here. No good signal bar. We're really far away, so we can pull back, definitely snap back into trend range, but even this high low is with a bearish signal bar. We have a brand new downtrend forming, so my goal is to identify a channel, and right now we can see I'm using these first two swings to help me identify the channel. At first I was looking for downtrend like this, but we kept overshooting it consistently and it's hard to find the exact confirmation. We keep pushing lower so strongly. For this reason, I'm going to select this slightly tighter one, which makes prices form a little bit better. But the structure right now is a clear downtrend, so I'm switching to downtrend rules. Right now we have a congestion, 1, 2, 3, 4, 5, 6, 7 bars stacked right next to each other. This is a micro trend range, and generally I want to stay away from trading these mini congestions. So even though we have a nice tempting short setup, can't really pull the trigger here. The downtrend is in play. EMA keeps holding, but notice how congested it is. I would like to see for prices to move out of this congestion and form a little bit cleaner setup. We had a nice lower high confirmation setup of this little congestion. It closed on its very low, very tempting setup. Notice how strong the signal bar is. But after that, we had a failed second entry long, but you can't sell directly into micro double bottom at the very low of the day almost. Even though it worked, this is really not a great place to take a short. This one is much better because you got room before the previous swing low, but you can't really force setup here. Even though you see it working now, next time you may take it, it may fail. But you can see the downtrend is getting quite strong. Key entry point is holding and EMA is holding at the same time as well. The uptrend has a break new extreme. The main downtrend, according to trendline rule, still needs to get new extreme. So right now what I'm watching for is a failed second entry long below exponential moving average. We can make one more strong push higher to create the measured move. But other than that, this downtrend was strong, confirmed, first break, and I expect for prices to create new extreme following the rules. So right now I just need to wait for bullish correction to play out and take push below EMA failed second entry long. Alright traders, so I'm going to wrap it up with my one single trade. Other than that, I took a break around this area, but there really weren't that many setups. Anyway, this downtrend right now reached a major break and new extreme. When the market opens straight into a slow trading range from the very beginning of the session, as you can see, there was no uptrend or downtrend prior to this trading range. Even the previous session, we slowly drifted into today's session with a consolidating structure, and you can see very few bars, straight trading range and healthy trading range. Now when I see this means that failed breakouts, especially in the ES market, they tend to have high chance of success. And you can see while we are in the small trading range, which you need to identify the key levels, you want to follow the short-term patterns, and then we have our first failed breakout followed by a very strong uptrend when there is a break new extreme. Now you can argue going short here makes sense, which technically it does. But generally once the move is so steep, it's hard to time it perfectly how many pushes higher you're going to make. And as you can see, prices eventually continue pushing lower. Now, the main structure of this market still remains trading range. We've been working a healthy trading range for quite a long time at this point on. So my main bias still at this point on remains bearish. And now we have new high, first entry long, second entry long for there, a new low, first entry short, second entry short. So we have two high probability setups in one, which adds a little bit more confidence in our setup, and we have a great signal bar. Now sometimes in trading ranges, especially if it's a healthy slow trading range right from the very beginning of the session, you can take failed second entry even on the opposite side of the EMA without push lower. It is definitely a bit more aggressive, but you can see the context wise, the breakouts out of the trading range according to price action rules will fail. We even had triple test second entry short, new low, first entry short, second entry short. But at this point you see that this failed second entry long is not selling off strongly as you would expect. Instead, this support is now holding, so it's very hard to reverse the market and go short here again, especially after such a big push. But I definitely would not go long just yet, because like we said, most breakouts will fail and chances are we're going to pull back lower. So tempting setup in hindsight, but very hard to pull the trigger, especially if you can see such a strong bullish reversal. Now after that point, we have very strong bearish push down, which you would expect for prices to continue reaching this main support, especially after the larger two-legged pullback. Notice market likes to move in pairs of twos, and the uptrend played up with the break new high. And as I see the resistance holding, and a strong push below EMA right here. Pay attention to what the prices are doing in a trend range. The resistance is holding again. Sellers are selling at the highs of the trend range, followed by a very strong momentum. At this point on, you can see no bullish momentum. You expect for prices to go here. However, you were stuck around in the middle of trend range for quite a while, and there was no good failed second entry long. If there was a nice failed second entry long with the better signal bar, would have been perfect. Unfortunately, like this, look at the bullish bar, a little bit congested. No clean setup. Then we have a little bit sideways structure here. We have second entry short, but uptrend could get new high. Close above EMA, had it close below EMA at least. Would have been better. And now you can see how the bearish momentum is picking up. However, once you are still far away from EMA, you will definitely at least get pulled back to the exponential moving average, because you're not going to start a brand new downtrend straight away. There's going to be a pullback after you move so far away from EMA. So notice we have another failed breakout here, and we have high-low confirmation setup of the failed breakout, but the signal bar was bearish. And notice prices pull back to test this breakout area and to test the EMA. Now, as you can see, we're not pushing above EMA, and EMA keeps rejecting, and we had another second entry short. But the signal bar was bullish. If you had on your chart much better signal bar with much stronger bearish body, it would have been better. But the way on my chart I have such a bullish bar as a signal bar, and this is inside bar still, I would need lower high. Eventually you can see we have a little bit of wedge formation. We have a small support here, so going short directly into it, it's a little bit risky. At the same time, you definitely want to be going long, because at this point you can see EMA keep holding, you're pushing lower. And after prices finally broke lower, this is where you have to start coming to conclusion that there is a stronger downtrend working. You have consistent series of lower highs and low lows. So the structure has changed. Now it's following the price action rules for the downtrend. The structure is bearish. I'm only looking for high probability setups to sell. EMA is pointing down, and I'm resetting the count at each new low. I have first entry short, so I'm going to reset the count. I have kind of like a matching lows, so I like treating it as a first entry short, second entry short. But we have congestion here. Notice 1, 2, 3, 4, 5, 6 bar stack, EMA exactly in the middle of these bars. But then we have this very strong lower high. Now, when I was watching this live, this wasn't sufficient breakout pullback. You would be selling the breakout. But if you combine the overall strength of the downtrend, and notice how strong the signal bar was closing on is very low, you know, chances are high that the prices are going to keep pushing lower, because it is confirming the earlier second entry short. EMA kept holding. Even if you draw the trend line a little bit tighter, you can see confirmation of the trend line, which is a great sign that the key entry point held and sellers are selling. So for that reason, great setup to take a chance on. This failed second entry long is way too close to these lows. Even though you see it working here, next time you will take it, you may get stopped out even just by a couple of ticks. But you definitely want to make sure at least here you have room to this swing low. Here, you're selling directly into this micro double bottom. You have no room before you get out of the low of the day. Very aggressive. You can't get, your emotions get the best of you, because right now you can see this working, but you know, just because the gamble work here once now doesn't mean the next time it will work. And as you can see, according to rules, right now we have a break and we expect new extreme. And this bullish push was a little bit stronger than expected. After I see a break of the downtrend, I expect for prices to create new low. Because we have a break, we expect new extreme, but the uptrend was stronger and stronger and stronger. So at this point on, you can see the first shortened channel has a break and multiple pushes new extreme, which this is how we always identify that there's a broader channel in play. So I cannot really pick and choose here. I need to redraw the wider channel. And this is where the confusion started, because you expect the failed second entry long for the main downtrend, but this uptrend was so strong that it's hard to imagine you're gonna take a failed second entry long so far up after such a big push up. So I was leaning more towards second entry long, creating new high first before eventually pushing lower. You can see there is no good second entry long because the signal bar is doji, still closing at the level of EMA. Really no good second entry long. But you know, failed second entry long looks great in hindsight. I would have really liked this setup had this bullish push been a little bit smaller, so you have no conflicting beliefs that the downtrend truly is going to get new extreme. By the time this bullish push formed, it makes you think that even this uptrend is going to get new high. So better to wait overall. And you can see prices kept pushing lower. And now as you see strong push below EMA and this downtrend being established, this is where you figure that you're probably going to reach the new low now. Okay, we moved too far down for this uptrend having new high. The bigger pattern in price action takes precedence. And right now we expect for prices to reach the new low. So I'm going to reset the count. And I have only first entry short before we reach new low. And now we have new low of the downtrend. I can't really take second entry short here. We have tempting, kind of like a failed second entry long, small little resistance, but notice how big this bar is. Had this bar been smaller would have been better. Then pretty much you can't go short because we have a new low. You can't go long, you're below EMA, just small little consolidation. No great setup for us to take following the rules. And as prices are strongly breaking below this trend range, you expect prices to reach the new low and you count for second entry short. However, we only get first entry short. And this is where you would expect, even if you have new low for this downtrend. This micro channel is most likely going to get new low, so you don't start reversing the market just yet. Okay, so I'm still expecting second entry short, but I have new low, first entry short only. So I'm going to reset the count, first entry short, second entry short, and notice what's happening. EMA keeps holding. Can I take second entry short? I cannot. All downtrends just have new extreme. If the bearish bias keeps continuing, which there's a possibility if the downtrend is strong or strong downtrend is developing, I need to wait for confirmation setup lower high, because it is very common to get trapped on a second entry short after new low. So we have new low, we have a second entry short, and I can see, okay, EMA rejection, and I can see small resistance forming. So now we have lower high and triple test at the same time of this smaller resistance below EMA, confirmation of the second entry short. It ended up doji. It is a little bit more aggressive, but context wise, this setup makes sense and market ended up closing. So you can see pretty straightforward price action, very few setups. The holiday season still remains. It's the Christmas season, so you can see market definitely slowed down and there's not that many setups. But overall price action makes sense right at the open on the trend range. And then you have a downtrend. Just this bullish correction was much stronger than expected. I would have liked had we pushed below EMA strongly here and would have really capitalized on the failed second entry long. It took a little bit of time before we finally created new low. Hope you had a great trading day. I'm going to talk to you guys next time. Good luck.